I get it. Life insurance is incredibly complicated and complex, and there's so many different options out there, and there's so many different salesmen trying to sell you on some different product or some different strategy. It can be very overwhelming for parents to just try and buy life insurance. In this video, I'm going to go over the 5 biggest mistakes that parents are making to buy life insurance in 2023. What's up, guys? For those of you who don't know me, my name is Philip Setter. I'm the founder and CEO of Affinity Life, where we've helped hundreds of Canadians find the right life insurance coverage at the right price, all from the comfort of their own home. So if that sounds interesting to you, I'll put the link in the description below and you can check it out. But without further ado, let's get right into the video. Okay, let's start with mistake number 1 parents are making in 2023 to protect their families: buying permanent life insurance to try and protect your family. This is just not a good option to cover the needs of our family. Now, here's the thing. I know that advisors will tell you that buying permanent life insurance is a great option because you can invest in it and during your retirement, you can take it. Here's the thing. For the vast majority of Canadians who haven't already maxed out their RSP or their TFSA, that they still have, high interest credit card debt that they might be paying off, this is a bad idea. And I made another lengthy video where I compared apples to apples RSP versus this invest in life insurance strategy. And if you're interested in that, just drop a comment below and I'll send it to you. However, in short, just investing in a very simple RRSP will beat this invest in life insurance strategy 9 times out of 10. And so if you haven't already utilized those existing mechanisms that the Canadian government has given us, then there's no point looking at this other strategy. Permanent life insurance isn't meant to be an investment. It's meant to cover us until the very end and help with estate planning or passing something down to the next generation. And so if you're using permanent life insurance to cover your family's needs, that's just not a great idea. If you are a high income earner and you're looking at other additional tax strategies, this could be a good idea, but it's not going to replace basic term life insurance. And you should still have that in place to cover the main need and main necessity for your family. Because 9 times out of 10, also permanent life insurance coverage is going to be a reduced amount. Maybe you need $1 million of coverage, but with permanent life insurance, you're only going to be able to afford $100,000 of coverage. I don't care what the investment is going to be at age 60 or 65. If you don't have enough life insurance coverage to protect your family, if something did happen, then it's not a good investment or not a good purpose for insurance at all. So mistake number 1, buy in permanent life insurance to protect your family. Mistake number 2, buy in mortgage life insurance. Mortgage life insurance, which not to be confused with mortgage loan insurance, is essentially a product that was created by the banks to try and sell life insurance, or a version of life insurance, which is a terrible product, by the way, which is not only more expensive than regular life insurance, also it may not pay out in the event that you actually need it. And that's the biggest problem with mortgage life insurance. Mortgage life insurance is what's known as a post-underwritten product. What that means is they're going to look at all the documents that you filled out and they're going to make sure everything was done correctly after you pass away. So they're not going to verify that it's going to work until after you pass away and your family goes to make a claim. So that's the second biggest problem. But there's other problems as well, such as it's a declining benefit, meaning that as you pay off your mortgage, the amount that you get, because it only pays off your mortgage, you don't get any extra above and beyond that. And as you pay off your mortgage, you get less and less and less, because maybe they were going to cover $300,000, but 10 years go by, your mortgage is down to $200,000. That's all they're going to cover. How are you paying the same amount in premiums to them every month? So mortgage life insurance is a terrible product. I made another lengthy video of why I think this is a terrible product. If you're interested in that video, just drop a comment below asking for mortgage life insurance and I'll send it to you. However, if you have mortgage life insurance, I would highly recommend replacing it with just a simple term life insurance, a fully underwritten, pre-underwritten plan that you know is going to pay out and it's incredibly affordable, and your beneficiaries get the face amount and not the bank, and they can use it, yes, for your mortgage, but also other expenses that are going to rise as well. Number 3, relying solely on their group life insurance plan. Here's the thing. Group life insurance is great. You usually get 1 to 2 times your annual salary in a life insurance amount. Usually the employer pays for it. That's awesome. We definitely want that. However, here's the thing. There's a few problems with it. Number 1, 1 to 2 times your salary is not going to be enough 9 times out of 10 for your family. If you have kids and you have a partner and you have mortgage and you have car payments, you have outstanding debt, if something were to happen to you, your family would be very financially impacted. So 1 to 2 times your salary, while nice, is not going to be enough. And the other thing with it, if you quit your employer and move to another one, that group life insurance, is not going to come with you. So yes, it's nice. However, you shouldn't rely on it 100%. You should supplement that with some type of personal life insurance plan and get the actual amount of life insurance that you need. And yes, this is nice to have, but don't rely 100% on that group life insurance coverage. Mistake number 4 that parents are making for life insurance here in Canada: buying life insurance on your child or your baby. This again is is not a great idea. I made another video detailing why I think this is a bad idea for the majority of Canadians and how just a standard RESP will squash this 9 times out of 10, as well as it's just an unnecessary expense for your family. Here's the thing. If you've already done everything else, if you've maxed out your RSP and your TFSA, and you already have your own maybe permanent life insurance plan, and you already funded their RESP, then yeah, it could be a good option for that investment component. However, 9 times out of 10, I find the family hasn't already done those things, and they're buying this for some type of investment component or something on the child. Here's the thing. If your child were to pass away, yes, you would be absolutely devastated. However, the main purpose for life insurance is to protect those in your life that are financially dependent upon you. And here's the thing. No one is financially dependent upon your child. So buying life insurance on your child is just not a great idea most of the time. In some very rare circumstances, it can be a good idea, but you should definitely look at your own personal financial situation first before looking at this type of strategy. Which leads me to mistake number 5 that parents are doing, which is just not buying life insurance at all. This is just not the best option. Guys, I know that it's complicated. I know it's complex. I know that there's advisors out there that are trying to sell you on all these different kinds of things. I know that you think it could be very expensive. I know that you think there's probably a lot of strings attached and that the insurance company might not pay. However, here's the thing. If you're in a family and you have children and you have a mortgage and you have a partner and you have all these things, and there's people in your life that are financially dependent upon you, maybe aging parents, maybe children, maybe your partner, like I mentioned, then getting life insurance to protect them if something were to happen to you is very important. So whatever your objections are, whatever you think it is, whether you think it's too expensive or it won't pay or there's strings attached or all these other complexities, this is something that you definitely should take care of in 2023. So if you guys are looking for instant life insurance quotes and you want to have a conversation, visit affinitylife.ca or anyone, not only myself, but any other broker to get these questions answered and get this done and move forward in 2023 knowing that your family will be protected. I hope that you guys enjoyed this video and I answered a lot of your questions about what mistakes people are making when purchasing life insurance here. If you guys have any questions, feel free to drop them in the comments below. And if you guys are enjoying this content, as always, all I ask is that you give it a thumbs up and I'll see you guys in the next one.